filing and what every business owner must prepare before submission. Corporate tax filing is not just about logging into a portal and submitting numbers, it is a full financial review of your business. The first thing you must confirm is your corporate tax registration status. Many business owners confuse VAT registration with corporate tax registration. Both are different. VAT is related to taxable supplies and VAT returns. Corporate tax is related to business profit and taxable income. Before filing notes, VAT returns and accounting revenue should be checked. If your VAT return shows one revenue figure and your accounts show another figure, the difference must be understood. Next, review your expenses. Only genuine business expenses should be recorded. Rent, salaries, professional fees, marketing, office expenses, software, bank charges, and business travel should all have proper support. A common mistake is recording personal expenses as business expenses. Personal shopping, family travel, personal vehicle costs, and owner lifestyle expenses do not ignore bank reconciliation. Do not record personal expenses as business expenses. Do not assume free zone income is always tax-free. Do not submit estimated numbers. Do not miss supporting documents. Do not ignore related party transactions. And do not wait until the deadline to prepare your accounts. A strong corporate tax return needs clean records, proper financial reporting, and a clear tax calculation. To summarize, before free zone companies, UAE companies, and other juridical persons, foreign companies with a permanent establishment or taxable presence in the UAE, and natural persons conducting business activity in the UAE where the turnover crosses the required threshold. One important point is this: even free zone companies may need to register for corporate tax even if they expect to benefit from 0% tax on qualifying income. Registration and tax payment are two different things. A company may have no tax payable, but it may still have a registration and filing obligation. For natural persons, such as individuals conducting business in the UAE, corporate tax registration generally applies when business turnover exceeds AED 1 million in a calendar year. These individuals must check their deadline carefully because the registration timeline is different from normal companies. For companies, the deadline depends on factors such as license issuance month, incorporation date, and whether the entity is resident or non-resident. New entities formed after the specified rules came into effect generally have a limited time from incorporation to register. So business owners should not wait until the tax return deadline. Now, what happens if you delay corporate tax registration? The main risk is an administrative penalty of AED 10,000 for failing to submit the registration application within the specified timeline. This penalty can directly affect your compliance record and create unnecessary cost for the business. But the risk is not only the fine. Late registration can also delay your corporate tax return filing, create problems in financial reporting, affect audit readiness, and cause stress when banks, investors, or business partners ask for compliance documents. Common mistakes include assuming that small businesses do not need to register, thinking that free zone companies are automatically outside corporate tax, ignoring the registration deadline, not keeping proper accounting records, and waiting until the last month to prepare financial statements. The right approach is simple. First, review your trade license, business activity, incorporation date, and tax period. Second, confirm whether your business is a taxable person, exempt person, free zone person, or natural person under corporate tax rules. Third, keep your bookkeeping, invoices, expenses, bank statements, and financial reports properly updated. Fourth, complete the registration through Imara tax before the applicable deadline. Fifth, plan for future corporate tax filing even if you expect zero tax payable. There may be specific situations where a late registration penalty can be waived or refunded if the required conditions are met, but businesses should not depend on relief after making a mistake. Proper compliance is always safer than correction later. If you are running a business in the UAE, corporate tax registration should be treated as a priority, not as an optional task. If this video was helpful, please like, subscribe, and comment your question below. Also share this video with any business owner who may still be confused about UAE corporate tax registration. For more practical updates on accounting, tax, VAT, audit support, bookkeeping, financial reporting, and business advisory in the UAE, watch our next video and stay connected with KPM Global Services. For professional assistance, you can also contact us on the details given. Many UAE business owners think small business relief means they do not need to register, file, or maintain accounts. That is a dangerous misunderstanding. Welcome to another clear and practical UAE tax update from KPM Global Services. Today we will explain small business relief under UAE corporate tax,